Is the climate changes around the world.
The rising sea levels because of global warming.
Water shortage, right? Wildlife and renewable energy.
I adopt a plant-based diet.
I do recycling at home.
My family, we sort out our rubbish before we put them into recycling.
Make sure that I off my appliances that I do not use every day.
The leadership is a key to success.
With COVID, we've proven that we can go paperless, and I think companies should adopt that.
Definitely it's a renewable energy. I hope that when it comes to my kids' generation, we can find a solution. I value both the profit and the impact.
I think it works hand in hand.
Definitely on the returns.
I do factor in returns a lot, but at the same time, if there's any chance that whatever I'm investing in negatively affects society or environment down the road, I could be less inclined to conduct such investments.
At the end of the day, it's still the returns that is the most important.
Something to do with the environment.
I'm not very sure exactly what ESG investing is.
It comes across as a more responsible ways of making choices when it comes to entering investments.
I'm not too sure, and I don't really have the time to really think about it.
No, I'm not investing right now.
Nothing changed very much.
I'm currently investing. I'm more open-minded about things, but at the same time, it's still a very cautious approach.
Not really that much, but more conservative. Like most Singaporean, I will just keep it to my CPF.
How are they going to, promote this ESG to public?
People can mask the information, you can doctor the numbers, so how are we supposed to authenticate that kind of reporting?
Is it possible to change the mindset of the whole entire financial sector?
How do I quantify tangible results? And is there a way to evaluate the business such that if I invest in it, there's some level of predictability in terms of profit?
E for environmental is just one component of the acronym ESG. The S and G stand for social and governance, so the term is much more than just climate. Perhaps a lot of people associate ESG with the environment as its impact is more visible and it creates startling headlines. The Intergovernmental Panel on Climate Change, the IPCC, their studies on climate change have concluded beyond any reasonable doubt that climate change is man-made and that global warming introduces clear physical risks to such businesses. There are secondary and even more profound risks from transitions to a lower carbon economy as governments now belatedly try to mitigate the worst effects of climate change. Countries around the world are introducing carbon pricing schemes and taxes. The number one question you must ask is carbon taxed or priced? Or could it be? And are there lower alternative carbon products that could become more popular substitutes over time? In the 1990s and early 2000s, most investors believed that choosing responsible investing came with a cost, a performance shortfall. In fact, this concern was so common that the word performance was mentioned in 1/3 of all responsible investing news articles published from 1982 to 2009. That's more than the references to any other term. Today, the notion that investors must settle for less with ESG returns seems to all have but disappeared. We surveyed more than 60 institutional investors a few years ago, and the responses showed that nearly 70% of them said they expect similar returns from ESG portfolios as from traditional portfolios. A lot of people also associate ESG investing with some sort of ethical or normative morality in the investing process. To us, it's more about understanding the E S and G risks and factors that are material for any investment. And when we do this, we believe it leads to better risk-adjusted returns. It's why we adopt this approach in all our active strategies. There are many ways to create a sustainable portfolio. Some asset managers choose to simply exclude shares of companies that do harm, from weapons producers to tobacco manufacturers. We prefer a more proactive approach, targeting companies that do good for society and the environment, while also offering strong return potential. The companies that score best on ESG have the best long-term plans for their business and are likely to be the ones that are most profitable. For new investors, it's important to firstly understand the difference between ESG integration, which we think should be part of the investment process at all times, and what we at AB call portfolios with purpose, strategies that not only have good returns for investors, but also returns for society and the environment. If the latter strategy is what they're seeking, investors should look for managers that have clearly defined purpose and principles. For experienced investors, it is important to think about the time horizon. The longer your time horizon, the more sustainable investing makes sense. This is the way the world is aligning and converging. In line with this long-term view, we would advocate against investing in just one narrow sustainable theme. In our experience, a theme that is hot in the short term often underperforms soon after. Finding balance is also crucial, both in life and in investing. And that's what a portfolio that does good and does well should be all about.